Grinnell Capital is a boutique asset management firm based in Park City, Utah.
Good morning. My name is Frank Grinnell. I've been investing in the stock market for over 20 years. It serves as my day job, and most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we share high-conviction ideas with subscribers, and we actively manage stock and ETF models for financial professionals and their clients, as well as individual investors. For more information, check out our website. Before we get to today's podcast, be sure to hit subscribe. And now, today's Street Views. Hey, good morning. I hope all's going well. Happy Wednesday. Welcome to the new video format of Street Views. Hopefully this works a little bit better. I've been wanting to do a format where I can have really better communication with everyone and being able to show things on a graph. I think that's super important. See, graph. Oops. So for me, I get a ton of information this way. So let's get started. First and foremost, yesterday's action in the market. Really interesting. I think it's kind of a bit of a warning shot to passive strategies out there. S&P and NASDAQ both down. NYSE advancing decliners, better than 2-to-1 to the good. So most stocks were up, even though the broad indices were down. And I think the NASDAQ was down 0.5%. I honestly think I think the environment going forward is going to really need to incorporate some active management as part of a strategy. It doesn't mean you have to abandon, if you're all passive, doesn't mean you got to abandon all the passive stuff. But I think it is smart to incorporate some active. Why not do it sooner than later? We're big believers over here. I've been doing it over 20 years. All right, moving on. So more signs out of China that things are reemerging and awakening over there. Got news out of a bunch of different provinces this morning, overnight, 3 different provinces, I think, getting back to normal life, subway functioning, things like that. So really interesting. We've been talking to you guys about, we've been long the EWH, Hong Kong. We got lucky enough to buy it down in this range. So we actually trimmed some a little bit recently, but this thing gapped up yesterday. It's going to gap up again. Look, as you can see up here, looking up 2.25 here pre-market, almost $20. Super interesting. I don't know if I'd be adding to it at this point. Certainly happy to be long. I think I would probably just stay long and see how this thing plays out a little bit. We could have some fits and starts as things get closer to actually fully reopening. I'm not sure it's just going to take off vertically, but nevertheless, a good thing. Maybe a more interesting way to play it, and our other way we're playing it, is the ECNS, the small cap. Another really good move off the lows here. Got down to as low as 20, basically 27 and change, now currently under 33. This thing's probably going to gap up as well this morning. But I like the small caps. We went to a Schwab conference about 3 weeks ago now, and Matthews Asia, you guys have probably all heard of these guys, dedicated Asia buy side firm, mutual funds. And they've got tons of boots on the ground in China. Had really positive constructive things to say about small caps. And I like the fact that you're avoiding the kind of the headline risk with the BABAs and the what have you. So I don't mind hiding out here. And if they really are going to start to take off a little bit, small caps are obviously going to do quite well. So like the ECNS, this is one I'd probably add to on dips. And let's go back to our market. So coming up on so many important levels in our markets, we look at the S&P 500 SPY. You can see here we got up to the 200-day moving average on Friday, pulled back Monday, pulled back a little more yesterday on the broad market. And if we compare that to the dollar looks like it wants to maybe get down and retest that 200-day. I think if you look at the DXY, it's a little closer than the 200-day. This is the UUP. But nevertheless, those two trends are super interesting. If we do get that peak above the 200-day on the SPY over the next few days, I think that could obviously ignite a pretty good run going into year end. I don't know how much further it runs past that, but it could be certainly interesting. SMH, look at the semis, it's another one. Obviously a super cyclical area of the market. Same kind of similar pattern as the S&P, got up that 200-day and is now pulled back. small caps, you look at the Russell 2000, really very similar charts. So for us, one of the things that I think is really interesting, if you look at copper, um, this is one of the times I think where you can invest in base metals beyond the cyclicality and the whole Dr. Copper reason for a rebound in the economy coming back. The consumption and the direction of this resource is going so much towards the EV side of things that I think copper can have its own life before a resurgence in the economy, if that makes sense. Um, and inventories are super low. And in terms of meeting demand going forward, there's really not the mining projects online at this point. So super interesting in terms of copper and the long-term outlook. One to definitely keep an eye on. That's real close. Looking up 2% here this morning. This is the Copper Miners ETF, COPX. That looks like it wants to break out above its 200-day. So with Powell today, I said it yesterday, I don't see how he trends align other than the recent hawkish rhetoric. He can't afford to have the dollar collapse and have risk assets just go vertical, including commodities, even though they're trying to do it. Oil up about, I think, 3% this morning. So he's got a job that I do think it's going to be kind of that, kind of reiterating of the hawkish rhetoric. I don't know how the market's going to take it. I'm not looking for a lot of dovish. I'm not looking for any signs of pivot, pause, whatever. Who knows? We'll see. But at any rate, like I said yesterday, given the run we've had, not the worst idea to have a little protection on. And that's it. Have an awesome Wednesday. See you tomorrow.
And now for some important disclaimers. This podcast is intended for financial professionals only. Grinnell Capital LLC is a state-registered investment advisor located in Utah. Services offered by Grinnell Capital can only be offered in the states of Utah, Idaho, California, and Texas, where Grinnell Capital is registered or where otherwise legally permitted. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisor.info.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be consumed, construed at the provision of personalized advice, and is subject to change without notice. This material should not be considered a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital LLC as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility. Therefore, this podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve long relative and risk-adjusted returns, primarily by investing and trading securities issued by companies that focus on the global information technology, consumer healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth potential and an abundance of both new and maturing product cycles, a field of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange traded fund, ETF strategy, with an investment objective similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some risk aversion in the event of significant market stress through investments and ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital LLC has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, www.grinnellcapital.com.